Starting. All attendees are in listen-only mode.
Hi, everyone. I'm Jackie Smith with the Intentional Endowments Network. We welcome you all to the Gender Lens Investing webinar. We're really excited to have you here to discuss this important topic. And before we get started, I want to mention that all participants are on mute, and we encourage you to send questions via the chat function throughout the presentation, and we will compile them at the end and get through as many as we can for moderated Q&A. Today we'll be discussing the business case behind why it makes sense to invest in women and the information and opportunities and ways to take action. We are extremely fortunate to be joined by two experts in this area, Kathleen McQuiggan and Julianne Zimmerman. Kathleen is a Senior Vice President of Global Women's Strategies at Pax World Investments and has previously served as President of Catalina Leadership and VP at Goldman Sachs. She has dedicated over 25 years to focusing on increasing the industry's understanding and responsiveness to the financial planning needs of women. And in 2015, she was named in the Investment News inaugural Women to Watch list. And Julianne is Managing Director of Reinventure Capital, and she has spent over 25 years in various roles focused on putting technology to work for the greater good. Co-founder, VP Communications, VP of Business Development, and VP of Engineering are to name a few. In her current role at Reinventure, she is in the process of raising a fund to invest in a chronically overlooked pool of entrepreneurs, people of color, and women. And before I hand it over to Kathleen, we would like to tell you a little bit about the Intentional Endowments Network. For those of you that don't know us, we are a broad-based collaborative network, and we are focusing on advancing intentionally designed endowments through a variety of strategies, including ESG integration, impact investing, and shareholder engagement. IEN engages key leaders and stakeholders in higher education, business, and nonprofit sectors. We provide opportunities for education and training, peer networking, convening, and thought leadership and information exchange. And with that, I will hand it over to Kathleen.
Great, thanks so much, Jackie, and welcome everyone for joining us today. We're excited, Julian and I are excited to be having this conversation with you today, even though I know many of those in the field would have thought that by 2017, we'd be looking at more gender-balanced organizations really across the asset allocation spectrum, but we don't have gender balance in organizations today. And whether you look at companies, public or private, if you look at government, if you look at other organizations, we still feel at Pax World that there's an investment opportunity associated with incorporating a gender lens into your investment practice. So we're going to talk a bit about this gender lens investing landscape today. I'm going to start talking a little bit on the public side. I'll hand it over to Julianne to talk a bit about the private side, and I'll hit on really just how from an investment process side you can add a gender lens. I will hit a few highlights from a business case because we continue to get incremental positive data points about the positive attributes that a gender lens can add to your returns. And then I'll also talk about the growing investor demand for this product as well. And just to start with, what is a definition of gender lens investing? I really like Jackie Vanderbrug's definition that she has out in her new book entitled Gender Lens Investing, which I highly recommend for anyone that's interested in the topic. And gender lens investing is simply the practice of integrating gender into your investment analysis. I think we often hear conversations today about the importance of having diversity within a talent perspective, kind of from a human capital management perspective. And diversity is something that is critical, but diversity does mean different things to different people, and so specifically focusing on gender as a component of diversity is what we're going to be talking about today. And at Pax World, we truly believe that there is an investment and business benefit by having gender balanced businesses. So we'll go to the next slide. And for those that feel that there isn't a myth out there, recently Peterson Institute did a study of over 22,000 companies and found that 60% of companies had no female board member, over half had no female C-suite executives, and 95% had no female CEO. The World Economic Forum does an annual gender gap report. They found that it's going to take almost 170 years before we reach gender parity into the global workforce. And so that's where we really feel at Pax World that there's an opportunity. Next slide. And if you're focusing on kind of the spectrum of where we see gender within an organization, this is the latest report from McKinsey on women in the workplace that really has got a lot of great data I encourage people to look at. And this is kind of, I think, a good visual of where kind of the corporate pipeline is today. And I think we often hear from organizations that we'd have more women in leadership if we just had more women kind of starting within our organization. And as you can see, it's really not a pipeline problem. We are seeing closer to a balance of men and women when they come into an organization. We like to say it's really an upgrade problem. So when you look at that senior VP, C-suite, and even CEO level, we see very few women kind of ascending to the top of those organizations. Next slide. And that's where we think that as an investor, we can bring a gender lens into our process and capture the positive benefits. At Pax World, we think that gender diversity is an important part of an overall sustainable investing approach. We think that gender plays a role both from a social, so kind of the S component, as well as a good corporate governance perspective. And we think that companies that do take advantage of women at all levels of our organizations, but particularly companies that have a critical mass of women in leadership roles, there are multiple positive benefits that accrue to the bottom line, so shareholders, but we also think there's lots of benefits that accrue to multiple stakeholders. Next slide. So I'm going to just talk a little bit about some of the business case results that are kind of out there. I really feel there's such a growing amount of evidence out there today, and I'll hit a few of the studies, but I'm happy to share. Our team can share any of these. But you've got organizations like Credit Suisse, which has done a study of over 3,000 companies assessing the level of women in senior management, and found that more diversity in management coincides with better corporate performance and higher stock market valuations. Thomson Reuters has done some great work around this, finding that companies with mixed gender boards have better, if not have better performance than some benchmark indices. They also found that more gender diverse boards had slightly less volatility as well. And so I think when you're looking for financial performance, Harvard's done a study, does gender matter in directors, and they found that return on equity and net profit margins with more diverse boards were higher. We've had also Credit Suisse not only look at senior management, but look at companies with women directors, and those companies with more women directors outperform those outperformed on average growth, price to book multiples. You've got, many of you I'm sure have seen the Catalyst information. We've seen McKinsey in their Women Matter series just do a significant amount of research around this, and I'll highlight a few other studies out there today. Next slide. But really we think that investing in women isn't just kind of the right thing to do from a social perspective, but it's also a smart investment opportunity. And once again, this is just a visual representation showing performance for diverse versus non-diverse boards. Next slide. And I think where we're seeing so much interest in this topic today is because I think we're increasingly seeing the amount of data that is being published specifically on gender metrics. And I know many organizations, what can't be measured, measuring is allowing people to really, I think, dig deeper into these. And if it's not what we're seeing from Bloomberg, not only on gender, but broader ESG data, MSCI is now incorporating more analytics, and it has also some good indices from a gender diversity perspective. We've got Sustainalytics that has components of gender in their ratings. Thomson Reuters is increasingly disclosing more gender-related and diversity-related materials. Organizations are approaching organizations like EDGE certification to really come in-house and do a deep dive out there. So I think we're increasingly being able to look at a company and not only hear what they're saying about the diversity of their workforce and where gender diversity is in the top of the organization, but we're finally getting hard metrics to really incorporate that into our investment process. Next slide. And so as we're seeing increased data out there, I would say we're also seeing increased organizations, including us at Pax World, but this is from a Veris Wealth Management blog they had posted about trying to do kind of a market landscape about gender lens products. And I think we often hear feedback, well, that sounds great in theory, and I believe the benefits of gender diversity to a company. However, there's really not a lot of options out there, so how can I include this in my investment process today? And I think that we've seen over the past 18 months, organizations both on the public and private side come out with some increased offerings, but we're also seeing a wider range across the asset allocation spectrum. On the public equity side, CalSTRS partnered with State Street for their SHE ETF. At Pax World, we have our Global Women's Index Fund, which is comprised of the highest ranked companies in the world for advancing women into leadership. I'll also highlight on the fixed income side, Community Capital has been buying bonds that finance various community development initiatives really since 1999, and we found that some of their areas, including affordable housing, education and child welfare, healthy communities, focus not only on kind of sustainability metrics, but we're finding those are issues that are benefiting women and girls as well. So I think when you see from product perspective, you are increasingly getting some options, whether it's in the equity side of things, whether it's on the fixed income, Community Capital, Breckenridge has a gender lens strategy, and then also we are seeing some great community type investments. Root Capital is an example where they've got a women in agricultural note. So I think investors that believe this business case want to bring some products into a portfolio are increasingly getting options how to do that. And I think from where we've seen these approaches be deployed within organizations, I would say there's kind of three basic ones that I've seen. The first is just thematically, we believe that investing in gender diversity is a plus, and so they might just have one or two products within their broader portfolio. We've worked with some organizations, a few women's funding network groups, where their investment committee, not quite convinced that this was going to be providing positive alpha, so they've carved out a portion for those board members and management team members that are passionate about this to have a gender lens component that feeds into the broader portfolio. And I think the exciting thing is we're increasingly having conversations and seeing more sophisticated endowments that have reached out to money managers and say, hey, we want an all-in gender lens portfolio today, and I know Veris Wealth Management, Cornerstone Capital are two organizations that have been implementing all-in gender lens portfolios for some clients. So if you're not quite sure how to approach these, I would say that we now have an interesting framework. Morgan Stanley has done some great work, I think, in this gender lens space as well. Last year they published a gender diversity investment framework that kind of gives investors an option, kind of a toolkit on how to approach this, whether they want to use gender diversity as a screen, whether they want to focus specifically on gender diversity leaders, or if they wanted to think more broadly about workplace equality, access to capital, products and services that may be offered to women as part of an investment. So in addition to this framework, Morgan Stanley has also done some very interesting quantitative reports, so I would steer folks towards that as potential tools as well. So we've got increased, I think, data supporting this positive investment case. We've got increased products that are allowing people to implement these in portfolios, and I think increasingly we're seeing investor demand that have interest in incorporating a gender lens. If you haven't seen on an individual perspective, the Center for Talent Innovation did a global study of high net worth women about 2 years ago, and they found that of those women studied, 90% wanted to be investing with social impact, 77% wanted to be investing in companies with diversity and leadership. So I think we are seeing from individuals to institutions that a gender lens can be additive to your portfolio. Next slide. So the other piece of that I think is important that we feel at Pax World when we're talking about gender lens investing is also realizing that our role as shareholders of all these public companies and how our voice can be another lever as we do our advocacy work for the companies we own. So across all the funds we own at Pax World, our gender diversity advocacy effort really is focused, as we say, there's no one perfect company, but we are invested in companies hoping to make them better. And some of the tools available to us would be how we vote our proxies. We withhold our vote against all male board slates of directors, and in most instances, if the companies don't have at least 2 women, we'll withhold our votes and have, over the past 7 years, withheld votes from over 1,000 companies for insufficient gender diversity. We also are very engaged in forming kind of joint efforts with other organizations, so the 30% Coalition we're quite active in, and then filing shareholder resolutions. We have filed 8 resolutions with companies about diversity on boards, and we've seen 5 of those companies add women to the boards. And I know we've partnered with many other great organizations out there collaboratively to work on that advocacy piece as well on shareholder resolutions. And then the last thing that we've been spending a lot of time on at Pax World on this kind of investing in women theme would also increasingly doing a lot around pay equity, because we do think when we look at leaders out there that we're finding some interesting trends, which you'll see us write more about, and we're finding that companies that do have better pay equity do have some interesting characteristics and better gender diversity profiles. So one more slide, Jackie, and then I'll wrap up and hand it over to Julianne here in a second. So at Pax, we think investors can be part of the solution when we look to advancing and putting capital into companies that are advancing women into leadership roles. We feel that this is really a global business challenge out there for us today, having gender-balanced businesses and women in senior management, and that the positive benefits to all stakeholders when you have a more gender-diverse leadership team, we think is important. And increasingly, we're seeing that investors want to be aligning their investments with what they believe is a smart business opportunity. In some ways, I think, think of gender diversity in companies as a way of kind of capturing, we think, smart beta. So we think that the time for gender parity in companies, economies, and countries is now, and are happy to take any questions at the end here, but let me pause, and Julianne, as we shift from kind of the public side of things to a bit more on the private side, where I think you've got some very interesting data and trends, I'll turn it over to you.
Thank you, Kathleen. So while Jackie's making the switch over, hello everybody. Thank you, Jackie, and thank you, Kathleen. We have been looking at Reinventure. Can you all see my screen now?
Yes.
We have been looking at this issue at Reinventure, and we're delighted to have so much interest from so many other parties on the private side. As Kathleen just shared with you some great actionable insights about public markets, I'm going to share with you some about private markets. And so let's start with just putting some of the preconceptions or prevailing wisdom on the table to examine. As a starting point, you may or may not know, this has been a widely published statistic, less than 6% of venture capital goes to businesses led by women. Now, the prevailing wisdom is that that represents an efficient market finding the investable deals, and that the companies started by women are typically not attractive to investors. Moreover, fewer than a dozen Black female founders have succeeded in attracting $1 million or more to their startups in the last 5 years, which statistically is effectively zero. The number is not better for Latinas, and it's not better for non-gender conforming folks. So when we talk about gender, we tend to focus on women, but it's also important to recognize that gender is not necessarily binary, and we have a lot of gender issues we can contemplate as investors. Putting that into context, the average startup company backed by venture capitalists and folded before it actually succeeds to make it to market and become self-sustaining, led by a white male founder, raises a bit over $1 million. So the prevailing wisdom is that those opportunities are the investable ones, including the failures, and that the failure is part of the model, and that the opportunities just don't exist to invest in companies led by women and people of color. And moreover, that represents, again, an effective, efficient operation of the marketplace. So let's look at that economic case and examine whether that does look like an efficiently operating market. And just a couple years ago, McKinsey Global Institute published a report in which they concluded gender inequality was not only a pressing moral and social issue, but a critical economic challenge, and really pointed to the lack of economic opportunity as a specific threat to the global economy. That story got sharpened substantially just in the last couple of weeks. I don't know how many of you will have seen the World Economic Forum's Global Risks Report, which just came out just earlier this year, in which they concluded that rising income and wealth disparity is the #1 risk to global economic stability. Okay, so what does this have to do with private market investments? Well, in short, young growing companies, according to many sources who have looked at the data over the past couple of decades, particularly in the US, account for most new wealth creation and nearly all new net job creation. They account for about 20% of total job creation, but nearly all new net job creation. So a persistent allocation of the overwhelming majority of capital to a small subset of the opportunity pool actually drives an economic instability. Okay, but what does that mean about the investment case? Is there an investment case just because there's an economic issue? Not necessarily. So let's look. In 2010, the U.S. Department of Commerce Minority Business Development Agency published their findings, in which, looking back over the previous several years, they found that minority-owned firms had significantly outpaced non-minority firms in terms of the growth of businesses, total gross receipts, number of employees, and total annual payroll, all of which are indicators of businesses which are attractive to investors. And women, typically in many of the surveys that have been done, particularly in the past, have been lumped in the minority category. But when women-led businesses were singled out, multiple sources have found that they represent the fastest growing sector. And when you count not just women founders, but women leadership in the company, they account for up to 46% of U.S. businesses and 16% of U.S. jobs. And if you recall, a moment ago I said young growing companies represent 20% of U.S. jobs. So women are punching above their weight in terms of contributing to the growth of these companies. A couple years ago, Elise Zoli took a meta-analysis approach and looked at a slew of publications from third parties, both about business leaders and financial leaders. And she concluded that looking across the entire investment spectrum, it was quite clear that women categorically outperform men as investment managers. So women as founders, women as startup business leaders and owners, women as financial leaders are demonstrating the attributes that are attractive to investors. So, do you believe that the prevailing wisdom is valid, that there are, in fact, not enough investable deals out there to consider? Not enough investable companies, not enough investable funds or other instruments? Or do you believe that the evidence that is mounting over the past couple of decades is actually indicative that there is a real opportunity pool, that there are significant numbers of innovative women and people of color? And by the way, again, I want to emphasize that we're talking about gender, so we want to acknowledge that that also includes non-gender conforming and non-heteronormative and all the rest, right? There's a whole bunch of folks who don't look like Mark Zuckerberg, who are nonetheless leading endeavors which are attractive to investors when you look at the attributes that they bring to the table. So I'm going to assert to you for your consideration that mainstream investors and institutions, for a host of reasons, some of which are in fact overt and intentional bias, but many of which are not, many of which are unconscious and unintentional, seek, find, and invest in simply what they're accustomed to looking for. And so, as a result, don't see what they're not looking for. So I'm going to encourage you to consider the opportunity to look for opportunities that may not have historically been on your radar screen. I offer to you that I believe very strongly by choosing funds and companies led by and or focusing on women, you can achieve both significant impact and attractive returns. And what do we mean by that? So the very first and largest impact is by addressing that economic risk that is simply a result of the asymmetry in flows of capital. But I will also assert for your consideration that any impact you choose to have, you could achieve by focusing on a gender lens in your investing. So, for example, let's say you want to drill down a little bit on economic inclusion. You could invest, for example, in entities like Village Capital, a very impressive, diverse team channeling capital to startup companies, social enterprises led by women and people of color, and serving women and people of color. You could, if you were focused on social inclusion and issues more attuned to race, you could, for example, choose to channel capital with or alongside entities like Digital Undivided, led by a really impressive African American woman, and channeling capital to startups led by women of color. You could, if you were focused on health and expansion of quality and accessibility of healthcare, invest in an enormous range of exciting young companies across the U.S., especially companies, for example, like Warrior Centric Health, which is led by a predominantly African American team with tremendous representation of women in the top leadership. As a matter of fact, in their case, all active duty service veterans who are providing a platform of award-winning services to the healthcare industry. If you're focused on financial inclusion, you could invest, for example, in startups like LearnLux, led by a very impressive young woman, Forbes 30 Under 30 honoree, which is providing services to educate and support financial literacy for millennials to help them become more confident and self-sufficient financially. You could decide that you believe as an investment thesis that innovation itself is actually the driving force in our economy and what sustains our financial system, for which there's considerable amount of evidence. And so maybe you would decide to focus on innovation, in which case you could invest in entities like, for example, 500 startups led by an African-American woman, and investing in an incredibly prolific pool of innovation-driven and innovation-driving startups. And we could just go on and on and on, and that's not the purpose of this webinar. But I do want to impress upon you, as Kathleen said, the data are there, and if you have the interest, the options exist in abundance. So we have impact. What about returns? The evidence is also there. So you can look at it in a variety of different ways. You can look at, for example, individual funds like DBL Partners, for example, led by a woman, has it's called DBL because they started off with a double bottom line, which they've now evolved to a multiple bottom line. Over the history of that practice has outperformed its conventional mainstream venture capital peers for that entire history. You could look at the sector of impact investing, which does not 100% correlate with gender lens, but nonetheless has significant overlap, and gender is an increasingly sizable component of the impact investment sector. As Cambridge Associates found, the sector outperforms other sectors. You could look at the survey last year from Gin of impact investors, in which 89% of responders reported that their impact investments met or exceeded their performance expectations. So there's also evidence that the returns are there. And while I would not at any point want to say that you should not make impact investments for below market returns, because there are instances and rationales where that is absolutely a sensible and appropriate thing to do. The point I want to impress upon you is that you absolutely don't have to do that. You can have both significant impact and competitive returns. So how might you do that? Well, beyond the things I've already mentioned, what we're doing at Reinventure is allocating early growth stage equity and debt capital, and by early growth we mean break-even-ish, so companies that are operating at a profitable burn rate and preparing to scale. And we're focusing specifically on companies led by women and people of color, and we're raising a $50 million fund presently for that purpose. But wherever you are and whatever perch you occupy or whatever perspective you bring to bear, professionally or personally, there are actions accessible to you. So if you're an institution, if you represent an institution, you can make a seat at the table for women and people of color to influence or even participate in your identification, selection, and evaluation of your investments. You can, if you use a manager, give that manager a gender mandate. And if your manager says to you, well, there's just not enough out there, you can point them to, for example, Mission Investors Exchange and other organizations that are sharing the practices of doing just this. And I would again echo Kathleen's endorsement of Jackie's book. It's an excellent resource. If you're a manager, you can diversify your portfolio. It's a great way to differentiate against your peers. There are high-value investment opportunities out there which others are overlooking. And an inefficient market is an investor's dream. So take advantage of it. As an individual, there's a host of avenues you can pursue. There are organizations like Pipeline Angels, which trains women to be angel investors. There's Social Innovation Forum, which puts investors and donors together to back social enterprises, especially with a very high representation of women and people of color. There's Digital Undivided, which I've already mentioned, and many, many others. Finally, as a community, I would encourage all of us on this webinar today, as well as our colleagues who are not able to join us, to really recognize the opportunity to use the data we have, to pursue the options in front of us, and to demonstrate that we can actually achieve better outcomes. And by better outcomes, I mean both substantially improved impact and also at least as good returns as conventional investments. And really refute the prevailing wisdom, which the evidence shows is not the best we can do. It doesn't serve us well. We can do a lot better, and I appreciate those of you who are already going down this path, and I encourage you to share your successes with others so that they will be inspired to join along. Thank you.
Thank you, Julianne. Now we will go to the questions that the audience has entered throughout the presentation. We'll get to as many as we can, and if we run out of time, I definitely encourage you to email us with your question, and we will connect with you. Okay. Okay, great. Sorry, one moment. Okay. First question, what percentage of entrepreneurs trying to raise venture capital are women? In other words, are there percentages of women raising venture capital so low also partially because there are fewer women entrepreneurs?
So I'll assume that one's for me. So there have been several people who have done interesting surveys, and it turns out that there are several confounding factors. However, what we do know is that in addition to anecdotal evidence which indicates that women leading subsequently quite successful companies like Care.com, which is now operating in 16 countries and had a very successful IPO a couple years ago, or Fin6, which is a technology company really growing like mad, or a number of others I could name. The expectation that women encounter, including the founders of those companies, when they meet with VCs is that if they don't have a qualified male team member in the CEO or CFO position, that they are not credible. And the numbers are really dispiriting about that. There are also confounding factors, as I mentioned, that a lot of women founders have elected not to seek venture capital because they've seen the statistics and they've heard those statistics. But what we know is that in programs like Mass Challenge here in Boston, for example, where there is not an intentional effort necessarily to apply a gender lens to select women preferentially, but where nonetheless the program has been constructed such that a lot of gender bias is put aside, so the unconscious bias is set aside. We see actually something approaching parity, not just in the applicants, but actually in the teams that advance and even in the teams that win. So I'm sorry, that's a pretty long-winded answer I would love to tell you that the data are complete. We have very incomplete data sets at this point. And I would say that the next few years, I would imagine that we will begin to see much, much more thoroughly available data. But what we know for now is that if you look at business school applicants, for example, and for that matter, enrollment, it's approaching 50% women in many of the top schools. And the majority of students are declaring their intent to found companies. So the shift, if it hadn't already happened, is already in process.
Great, thank you. And what impact can more women angel investors and VCs have? Is there any proof that focusing on cultivating more women in investment would lead to more gender diversity in business?
So I think both Kathleen and I have a view on that. I'll take a first cut at it. What we do know for fact is that firms that set out with a specific investment thesis, whatever that investment thesis might be, are better at achieving that investment thesis than firms that back their way into it, no matter what that investment thesis is. What we've seen in the last few years, looking at the data of firms like DBL Ventures and Backstreet Capital, which is much younger, as Backstage Capital, excuse me, and Digital Undivided and 500 Startups and the like, is that they do in fact recognize different teams as investable than their mainstream peers. Their portfolios actually do look different. And ultimately, that does make a difference in, again, the wealth and job creation that results from those companies becoming successful. When we look at emerging fund managers, it's not always quite so clear. So there are emerging fund managers, for example, and emerging is usually the category in which you find significant representation by women. We find that there's a wide variety of investment theses, and not all of them are necessarily gender-oriented. And I would defer to Kathleen to talk about, particularly on the public front, how that does or does not influence gender parity issues in corporate governance, for example.
Yeah, thanks, Julianne. So this is Kathleen. I would say generally so just briefly on that question, I think we are at an interesting time when you look at kind of corporate America and the land of entrepreneurship, that I think increasingly we're hearing companies that truly want to have more women, but we're finding women are increasingly saying, the corporate America 24/7 extreme job doesn't work for me, so I'm going to move more towards that entrepreneurial side, and I'm going to go start or work for that company that I think is understanding and values what matters to me. And so I think we are at an interesting time here where particularly I'll highlight the financial services sector, where all the firms have these initiatives to be promoting more gender diversity up to leadership, but they're struggling with women choosing to go and work on more of the entrepreneurial world. So, I think, Julianne's mentioned some great points. I think there are a lot of initiatives to it. I would just highlight that when we speak with a company that truly believes that having more diversity in their workforce is a business imperative, one of their top 3 business imperative. It's a competitive advantages. They believe there's more innovation. They think it's a different kind of risk management because a different set of questions are being asked. I mean, those are the companies that we think ultimately people want to be invested in, because I think Julianne said it spot on. The perception is that you can't do good and have returns. It's either or. And I think truly, for today, investors, you can pick a bucket or pick a spot you want to start in, but I think just having that conversation of how do you incorporate gender in your decision-making process, and what are you doing to think about diversity within your investment process. I think the more we get people asking those questions, even if the capital doesn't follow, I think we'll see behaviors change.
Great, thank you. Going back to the pipeline of women in corporate level roles, how do we think about and account for gaps in raising families? And is there any research around this? And do we then focus on support for women on maternity leave or reintegrating after a birth or adoption, etc.?
Yes, thank you. That I think the public policy side of issues that can help drive change, I think that parental leave is definitely something that we at Pax work on through our advocacy, and I think it ties in dramatically to pay equity. If you look at why women are paid 78 cents on the dollar compared to men, one of the big reasons for that wage gap is the amount of time that women are spent out of the workforce caring for children and increasingly caring for parents. And so Catalyst has done very good work around this concept of kind of on-ramping and off-ramping, and just when we find women are stepping out of the workforce to fill that caretaking role, if they're out for over 3 years, it has a dramatic impact on their wage once they enter back in. And I think there is increased knowledge that if the wage gap continues to persist, we run into a retirement crisis for women because they don't have as much wages and savings and therefore retirement income. So I think there are these different funnels going in that we need to be thinking about, and pay equity does lead to parental leave, and I think Anne-Marie Slaughter's really been great at kind of starting that conversation. And if you watch this, though, it's fascinating to see over the past 6 months, firm after firm is coming out with new parental leave policies, and the United States is behind on this topic relative to other countries. And where we do see very high gender diversity ratios, a lot of the Nordic countries, they've got very strong leave policies, for both parents, male and female. And I think the more progressive companies here in the States do offer generous leave for both. And this is really about kind of a lot of the health and wellness feeding into an organization's success. And Mercer's done a lot of great work around that wellness piece that I point to folks as well.
Thank you. Another question. As a women-led startup in a seed stage, what are examples of investors that would be interested in our cause, which is community solar and financial inclusion?
So I would say my advice to any founder of a seed stage company thinking about seeking investment is really, first of all, to think about all of the forms of capital you are going to want to exercise or utilize to support your company's success. And equity capital is only one of them, and may not even ultimately be the most important. And I say that as an equity investor. It's not necessarily the first thing you should be thinking about. So to the extent that it does make sense for your purposes, I would say you want to focus on investors who are knowledgeable and interested and capable of providing more than just capital, who are going to care about the success of your enterprise for reasons in addition to beyond their financial returns. So you may find, for example, that you are going to get a better reception among investor practices led by women, like DBL Ventures, led by Nancy Fund. But you may also find that it's the alignment that you find on the community solar and financial inclusion parts that is equally or even more important. And so while gender is certainly a part of your equation, it's not the only part of the equation for sure. And you'll want to make sure that you find as close alignment as you possibly can with any investors you bring aboard. There are great resources you can use depending on what stage. You said your seed stage, so you could look at Venture Fizz, you could look at Angel List, you can look at a bunch of other resources that name the deals and name the sectors where capital is being deployed in early stage. And also I would encourage you to talk to other founders who have raised capital in adjacent propositions. So in financial inclusion, in community solar, or in adjacent segments. Find out what their experience was. Who were the investors they found to be high value investors? Who did they feel actually brought more than money to the table? What was it like to work with them? Do your homework, because you're selecting an investor as much as you're auditioning for their capital.
Thank you. And is there data about gender issues besides diversity on the board and pay related to public companies, such as support for contraception or maternity leave policies, etc.?
Yes, this is Kathleen. I'll take that one. I think there is some data out there. It's really what a company is disclosing, but that being said, think back 10 years ago when most companies weren't putting out CSR, corporate social responsibility report. Most of the gender data really was just basic EEO-1C data. What we're finding is, as investment firms like Pax are engaging companies in the dialogue and encouraging them to disclose some of their best practices, we are finding that there is more information out there. I think a challenge that some firms find is, you just can't download this data set from, XYZ and plug it in. I think some of the metrics, maternity leave policies, what other, leadership development training policies, all the firms are doing, there's still some digging that needs to be out there. But at Pax we kind of look at a wide range of factors. We've got a research team that's kind of digging into the issues, not only looking at what a company's disclosing, but government databases. And as I said, the data providers are increasingly encouraging companies and asking them. So I think we're making some progress, but I think we look at Pax, when we look at our Women's Leadership Index, we've got 5 factors we look at today. We're hopeful that we can be adding other components of gender leadership characteristics. As I mentioned, I think something like an EDGE certification is an interesting tool. Outside the United States and Australia, we're seeing companies do pay equity audits. So I think there are more metrics we can be looking at, but still kind of early stages of companies voluntarily disclosing them.
Thank you. As someone who has worked in gender diversity and inclusion, but not exclusively in finance, what are good companies or organizations looking for these types of hires that could have a positive influence in this space?
So I'll start on this, Kathleen. I think there's a lot of interest in, I believe, just broader impact and sustainable investing. One organization, the WISE group, Women Invested in a Sustainable Economy, I think does a very good job of sharing some of the job postings out there. And whoever's got that question too, Jackie, feel free to share my contact information, and happy to connect them with some other opportunities we hear, openings out there. I would say I think the broader impact space. Once again, you can be in the private side where Julianne is, the public side where I am. I think we do have lots of people looking to move into this space, and I think the opportunities are growing, but I think it's getting tied into some of these great networks Jen was already mentioned, but I'm happy to connect with that on that question offline as well.
Thank you.
So I'll just add a couple of other things. As Kathleen said, there's a variety of ways you might get involved depending on where and how you want to engage. On the nonprofit front, Oxfam has been doing some really very innovative things with finance, and there are some really impressive programs they're pursuing on the gender front. EDGE, the EDGE certification has already been mentioned. Kathleen mentioned that earlier. Double X Economy is a web portal started by Linda Scott that provides a window into a whole host of issues, commercial and policy, both. There are groups like Golden Seeds, for example, that are investing in women-led startups where you might find a pool of rising young companies you might be interested in lending a hand to help grow. So depending on where you're interested in engaging, there's all manner of places to jump in.
Great, thank you. Similar question, are there investment managers and venture capital firms actively seeking women on their teams as a result of the data that shows women investment managers outperform men?
I would say the enlightened ones are. I think really, I think the most forward-thinking companies are not, are thinking about, what we would say are kind of, sustainability challenges and opportunities. And it's kind of both a risk and an opportunity. If you don't have the best and the brightest and the diversity of thought going around your decision-making table, where's your company going to be? And so I think, there is increased conversations. I think part of that is being driven by the conversations, and I think that role that social media has in calling out some of the inequities out there today, but not all companies. And I think that's where the companies that are addressing this feel that this is a competitive advantage. Their competitors aren't doing it, and they want to capitalize on, having that diversity of thoughts and perspectives around their decision-making tables.
I concur with that. I think that I see a bunch of forward-looking organizations across the spectrum looking for ways to really improve their heterogeneity internally and also across their business. And the reason that's important is not just for all the reasons we've already cited today, but the organizational literature over the past couple of decades has really become unanimous that if you have a completely well-scripted recipe, a sequence of events, a script that you can follow, then you want a homogeneous team, as homogeneous as possible. But if you have any surprises or any gaps in your knowledge, or if you're undertaking innovation of any kind, or if you have competitors who are not simply passive, then you want the most heterogeneous team you can assemble. And that includes gender. I would say the countervailing force is habit and pattern recognition. We tend to see what we're looking for. We see the network we inhabit. And if you have inhabited a homogeneous network and you have worked with people who look and sound like you for a long time, and especially if you've had a measure of success in doing that, you don't feel very comfortable making a change to that habit. And so I think we're seeing both of those play out. And as Kathleen said, there's a mix.
Thank you. And So we did have a couple questions about Jackie Vanderbrug's book, and it is called Gender Lens Investing, Uncovering Opportunities for Growth, Returns, and Impact. And it is available on Amazon and probably other bookstores as well, but it's definitely available on Amazon. So thank you again to the panelists and everyone that participated. I do want to mention that we have another webinar coming up at the end of February on proxy voting and shareholder engagement for endowments. So that could put some great use to what we just talked about in the Gender Lens Investing webinar as well. And thank you again. And if anyone has questions that weren't answered, please feel free to reach out to anyone on the IEN team. Thank you again.